Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting however with this high time frame volume profile, because we now closed a weekly candle inside of the value area, increasing the probabilities price will touch the point of control at 38.7k. Now quite commonly price will first retest this support resistance area, the white box that you see over here, as well as the value area low for then potential continuation, but nonetheless the point of control is an area of interest at 38.7, and then we have the value area high at 49.5k. If we then zoom into the 12-hour time frame and look at the bullish scenario, then we have a running flat over here. Now in general, a running flat is a rare pattern. It is also the least common flat pattern. Most commonly is an expanding flat, then you have a regular flat, and then you have the running flat where wave C does not take the low of wave A, and especially on higher time frames, this is not something you see very often. Now in this scenario, we have a zigzag A, zigzag B, and then a 5-wave structure in wave C, where wave C reached the 886 taken from the low to the high of wave B, the Fibonacci retracement, created a double bottom here as well, except for Bybit, which wicked the low to 23.6k, which is also something that's interesting because based on statistics, these type of wicks tend to get filled, but as long as it stands, we are moving towards the upside in bullish market structure. So the bullish scenarios have a bit of a higher probability, but we will talk about the bearish scenario as well. Now, if we then zoom in to this being the low and looking for this move to the upside, then a double 1-2 over here is on the cards, where we have a double 1-2, wave 1 and 2 in green, 1-2 looking for green 3, green 4, green 5, and then inside the green wave 3 we are looking for the lower degree Elliott wave count in blue, 1, 2, then eventually 3, 4, and 5. Now for the blue wave 3, the 1.618 is usually a minimum target, which has been hit, acted as a little bit of resistance. Then a push to the 2.618 also acted as a little bit of resistance, but now we're ranging on top of the 2.618, increasing probabilities that the 3.618 will be touched, which is sitting at 36k. Also, around the 3.618, we have some additional resistance at 35.9 to 36.2k. Now, if the high of the potential wave 3 is already in, then we are going to be looking for a move to the downside in a wave 4, which should take at least 9 days most commonly, because this wave 2 was around 9 days. So you preferably want to see wave 4 also being 9 days or longer, as a wave 4 tends to be longer than wave 2 in time. And then the targets for a wave 4 are between the 0.236 and the 0.5 taken from the low to the current high that we have. However, based on the information we have so far, having the high of the blue wave 3 at the 3.618 at 36k would at the moment be preferred. But hey, if price moves down, then at least we know what to look for. And if price moves down over here to the 0.618, the bullish scenario is invalidated. Again, it can, by the way, move down, but if the correction is shorter than this wave 2 in time, probabilities are lower. It's a wave 4 of the same degree, and it might be a wave 4 of this potential wave 2, and then a 1, 2, 3, 4, 1, 2, 3, then 4, and eventually a wave 5 to end blue 3. If we then look at the bearish scenario on the 12-hour here, then we are looking for an expanding flat scenario. So we have a 3-wave structure in wave A, 3-wave structure in B, looking for a wave C to the downside. In this scenario, the most common target for B is between the 1.236 and the 1.38, pulled from the high to the low of A, and the 1.618 here is a less common target, but a target nonetheless, sitting at 36.1k. For a wave C, you then want to see an impulse to the downside, 1, 2, 3, 4, 5 wave move, where the two 1.618s are an important target, which gives us an area between 23.9k and 18.6k, which means also the Bybit wick will then be filled and the double bottom will be taken as well. Now, if we look at this move to the upside, we then have to look for a 3-wave structure, and then we have an ABC over here, a 5-wave structure in wave A and an expanding diagonal. Now, also an expanding diagonal is a rare structure, 1, 2, 3, 4, 5, where wave 3 is longer than wave 1, wave 5 is longer than wave 3. Then you have wave B reaching the 0.382, which of course is quite short compared to this wave A. And then you're going to be looking for a wave C to the upside in an impulse, where you then have a 1, 2, 3, 4 sideways, for eventually a 5, for then continuation to the downside. The 1.618, which is a less common target for C, but a target nonetheless, sitting at 36.3k. And this is the most common target area for a wave C, which is where price is ranging at the moment. If we then zoom in to the lower time frames, of course, earlier today we spoke about these highs being taken and the probabilities for price continuing. But what then of course happens is, first of all, we have to always observe the reaction, right? See what happens. If we looked for the bullish scenarios, potential 1, 2, 1, 2 continuation, or 1, 2 and then continuation, you're looking for a wave 3, meaning an impulse, meaning volume to the upside, strong candles. However, we basically wick this high, move back towards the downside, and what was then very interesting, and this is what I mean with always observing the reaction, is we started to create bearish local CVD divergences. So we did have bullish CVD as well, by the way, over here, higher low in price, lower low on the CVD, but this was then countered by the bearish CVD divergence over here. Now initially this is not the problem, the green one was the first one that appeared, which then has priority, but the moment you see this over here, that is when things become a problem, because here, candle after candle after candle, price is moving to the downside, but CVD was moving up on the lower time frame. So here on the 15 minute, actually let me go to the 5 minute, what we look for over here is we had the higher low in price, and on yellow, lower low on the yellow CVD, bullish CVD divergence. But what then happened over here is, with this green candle, also on yellow, lower high on price, but look at the green candle, higher high on the CVD. So yellow CVD went from showing bullish to showing bearish, and that is a very, very important change, because it is the same line that went from bullish to bearish. Then also over here, on the 5 minute, lower highs on price, but on blue, higher high on the CVD. So also the blue started to show bearish CVD divergences, showing weakness for then a push towards the downside, which now took this low over here. If we then finally look at the probabilities of the different scenarios, then at the moment, the probabilities, if I can actually find them, on the medium time frame and the low time frame for me are pretty neutral, because I prefer looking at the more local price action. And currently, more locally, the probabilities remain higher to eventually take this high over here. However, if we look at the scenarios inside of this range, then, well, for the bullish scenario, we actually wanted to see continuation, and now probabilities increase. We're going to be in a more complex WXY or ABC for maybe another low or lower prices to come, and then continuation. But that is something I will show tomorrow in a bit more detail. So either a WXY or an ABC is then still on the cards as well. But in general, probabilities are higher to take these highs over here. And then we have to wait and see what price does if it moves to the upside, if we get the ABC and then a rejection. Or if we have the bullish scenario, where we then finish potentially a wave 3, looking for a 4, and then continuation to the upside in a wave 5. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.